Hello my dear students, we are discussing part B of your syllabus, which relates to analysis of financial statements. You already know what are the financial statements which you have to study in 12th class. These are balance sheet, statement of profit and loss account, and cash flow statement. These statements are prepared, profit and loss account, statement of profit and loss account, and balance sheet are prepared according to the Schedule 3 of the Companies Act 2013, and cash flow statement is prepared according to Accounting Standard 3 revised. Now, the statement of profit and loss account shows what is the profit, what is the profit left after appropriation, what is the profit left after depreciation, what is the profit left after tax. All these things are clearly shown by statement of profit and loss account. If there is profit, people are happy, shareholders are happy, the employees are happy, the management is happy, banks are happy, lenders are happy, everybody is happy to see that the profit is there. Similarly, the balance sheet has got two parts, part 1 and part 2. Part 1 shows equity and liabilities, remember, equity and liabilities, and part 2 shows assets. So these two parts collectively indicate the financial strength or weakness of the firm. Now we have the equity and liabilities, their total, and assets total, they are equal, and we say that balance sheet is fine. So it is not simply looking at the technicality of two parts, assets and equity and liabilities totals. It is not sufficient just to see that there is profit and feel happy. There are many things which will come to know if you try to read in between the lines. You have to go behind the figures. How these figures have been derived. It is possible that something has been done to the figures. Figures may have been meddled with. They may have been polished. Something may have been hidden from the normal layman, from the common man, which he may not be able to see. So for this purpose, the analysis of these statements, the statement of profit and loss account and balance sheet, is very essential. There are many people who are watching the company's performance. There is management. Management is watching the performance of the company because it is their efficiency which is at stake. If the statement of profit and loss account does not show expected profits, high profits, or they show losses, that means the management is not taking proper decisions. Their decisions are not properly thought over. So there is something wrong in the decision making. There is something wrong in the planning of the management. They may not have picked up the right products. They may not have picked up the right advertising agencies or advertising sources. There may be something wrong somewhere. The selection of the workforce may be wrong. The people at the senior management positions are not working properly with responsibility. So many things. The management has got reasons to feel happy and management has got reason to be worried about. This is what the statements will tell the management. Then there are other people who are watching, public, general public, or for that matter shareholders. Listen to me, my dear students, what happens Shareholders are the owners of the company. They are the owners, but they are not allowed to enter the company's premises, because if all the shareholders enter the company, how will the company work? How will the people there work? They are allowed to come to the meeting of the shareholders, and there in the meeting they can put forward their points of view. They can criticize the management. They can ask the management questions, various types of questions, inquiries, and the management have to answer them. What sort of queries? These queries will come only if the statements have been properly analyzed, and then something wrong is found. For example, there is profit. The statement of profit and loss account shows profit after tax, after depreciation, after interest paid to the debenture holder. It shows a profit, and the shareholders are very happy when they are told by the management, shareholders feel happy, your company has earned profit. But the shareholders do not get dividend. They have reason to ask the management, what happened to the profits? Where did the profits go? Have the profits been misused or have been used properly? Have they been invested in machinery? Have they been invested in buying premises or factory land or developing or you say expanding the business? Or have the profits been used in paying back the loans? These are the good things that the management will do. Or the management may use it for unproductive purposes also. Unproductive purposes. For example, organizing functions or expensive functions in the 5-star hotels, just wastage of funds. If the money is just wasted like this, the shareholders have right to ask the management, where did the profits go? And sometimes something opposite happens. There are no profits. The company has not earned any profit, but the shareholders are getting dividend. Somebody is befooling the shareholders. Shareholders are being taken for a ride. उनको पूरी बात बताई ही नहीं जाती. उनको तो डिविडेंड का चेक दे दिया और शेयर होल्डर खुश हो गए. असली बात यह है कि कंपनी ने प्रॉफिट ही नहीं कमाया, और कंपनी ने थोड़ा प्रॉफिट कमाया, तो डिविडेंड कहां से दिया? द डिविडेंड वाज पेड आउट ऑफ accumulated profits, last year's profits, reserves. This is how the management can hide some important failures from the shareholders, from the public. There are many other people who are interested in knowing what actually is going on in the company. At the face of it, the financial statements may not show the true position. There may be window dressing. I'll tell you what window dressing means little later. But so many things are there which may be hidden from the normal eye of a shareholder or a creditor or a debenture holder or a bank who is a lender. So therefore they have to open up the financial statement, try to read something behind the figures, go deep into the fact how the figures have come. So that is called analysis, and we now proceed with how to do this analysis. My dear students, there are two methods of analysis. One method is the horizontal method. There are two methods of analysis, horizontal method and vertical method. What is horizontal method? In horizontal method, it is a comparison of various figures for more than 1 year, 2 years, 3 years, 4 years, 5 years. For one company, its performance for the last 5 years is compared with each year. Is it improving or is it going down? If it is improving, very well. Sales of the last 5 years are compared. Profit after tax, last 5 years are compared. If it is going up, very good. And if it is going down the hill, reason to worry. So this is horizontal comparison. When more than 1 year figures are taken to compare the performance of the company in various years, this is horizontal. Maybe sales performance, maybe profit performance, maybe working capital analysis, anything can be taken over a period of time. It's a question of time series, your time series. In time series, we take more than 1 year and develop a trend of various items. That is horizontal analysis. As against that, for vertical analysis, you see only 1 year figures. Only 1 year figures are taken, and the analysis of that 1 year is done. What is that? In 1 year, you take a balance sheet or you take a statement of profit and loss account. What do? We compare two figures of the same statement of profit and loss account. Two figures of the same statement of profit and loss account. What are those two figures? For example, I compare net profit and sales. I work out net profit ratio. What is the ratio of net profit to the sales? Say it is net profit upon sales into 100. Net profit divided by sales into 100. Say it comes to 56. Net profit upon sales ratio is 56%. Wonderful. Then we can compare what the other companies carry on similar business. What is their net profit ratio for 1 year? If those companies carry on similar business, say a company is garments business, there are other companies in garments business. If one company is having 56% ratio of net profit to sales and the other companies are all having 70%, that means this company is not doing good, not doing well. There is something wrong that must be looked into. This is how two figures of the same statement. We can take balance sheet figures. We can take current assets and current liabilities of the same balance sheet. We can find out the difference between the two. What is the difference between the two current assets and current liabilities? Yes. CA minus CL is, yes, it is working capital. So we can say working capital. What is the working capital? What was the working capital of other companies in the same month? So it is 1 year figures, two figures of one statement or two figures of two statements. Two statements means balance sheet as well as statement of profit and loss. One figure from statement of profit and loss for year 2015, that is net profit. Very good. Net profit is taken from statement of profit and loss account, and from balance sheet we take shareholders funds, we take owners fund, and find out the relationship between net profit and shareholder fund. This will mean return on investment, ROI, return on investment of the owners, how much money the owners have invested and what they are getting back. This is a very important item which everybody is interested to know, that what is the return on investment. Is it better than other companies in the same business, or is it worse than the other companies in the same business? This is comparative study for 1 year, and this comparative study for 1 year is called vertical analysis. These two analysis you have to remember and write a 1 mark or 2 marks note on these two. Okay. Now I come to the next thing, that is, what is the objective? What are the aims of this analysis? Aim of analysis is, I have noted down some here, to measure earning capacity of the business. Now how do we come to know the earning capacity of the business? Through this horizontal and vertical analysis, we come to know what is the earning capacity and which statement will tell this. Statement of profit and loss account. Statement of profit and loss account will tell us what is the sale, how much are the expenses incurred, and what is the net profit after tax and after depreciation and after paying interest to the debenture holders. What is the profit left for the shareholders? And this is earning capacity. Now, the company has assets, plant, fixed assets, machine, factories, but they are not working to full capacity. They have a capacity to produce 5 lakh units per month. If the factory is producing only 1 lakh units per month, so that means the capacity is not used fully. Some capacity is being wasted, only 1/5, 20% capacity is used, 80% capacity is wasted. Care has to be taken up. If the capacity is not fully utilized, that means it will affect the earning capacity of the company. Let the company go in for full capacity utilization, that will increase its production. What will happen when the production goes up? Sale will go up. What will happen when the sale goes up? Profit will go up, my dear students. So this is the analysis will help to measure the actual earning capacity, whether it is full capacity or not. And the second point is to measure financial strength and weakness. Financial strength and weakness. Strength means whatever the assets mentioned there, their value is correct, rather more than the value mentioned in the balance sheet. If there are machines worth ₹1 crore mentioned in on the asset side, part 2, under fixed assets, tangible machines, 1 crore. But all these machines are in a dilapidated position. They are not working properly. Their capacity is to produce 100 units per hour. They are producing only 40 units per hour. These machines are defective. They don't worth 1 crore. That means we will say that it is a weakness of the company. On the other hand, if the company has bought a piece of land for factory, it bought it 5 years earlier for 1 crore. It will be mentioned at 1 crore. Factory land, 1 crore. But the actual value of this land today is not 1 crore, it is 10 crores. This is the strength of the company, that the actual value of the assets is much more than the book value. Book value is the value mentioned in the balance sheet. If the actual value of the assets is less than the book value, financial position is weak. If the actual value of the assets is much more than the book value, strong financial position is strong. Okay, so therefore this analysis will help us in measure the financial strengths as well as the weakness of the company. Then we come to assess the solvency of the firm. Solvency of the firm. A firm is solvent, a company is solvent, a business is solvent if it is able to pay its creditors. अगर एक फर्म, एक बिजनेस, एक व्यापारी, एक व्यापार अपने क्रेडिटर्स को पैसे दे सकता है वापस, तो वो सॉल्वेंट है. अगर उसके पास पैसे ही नहीं है और क्रेडिटर्स आर नॉकिंग एट द डोर, मांग रहे हैं, भाई हमारे पैसे दो, हमारे पैसे दो, हमारे पैसे क्यों नहीं देते, वो कहता जी पैसे मेरे पास नहीं है आपको देने के लिए. इंसॉल्वेंट, बैंकरप्ट ये पोजीशन हो जाती है. तो क्रेडिटर्स कहाँ लिखे हुए हैं? इक्विटी एंड लायबिलिटीज का जो पार्ट 1 है, उसमें जो लायबिलिटीज पार्ट है आपने देखा ना, लायबिलिटीज पार्ट में दो लायबिलिटीज हैं, कौन कौन सी? एक नॉन करंट लायबिलिटीज जो लॉन्ग टर्म लायबिलिटीज होती हैं, और एक करंट लायबिलिटीज। और अगर फर्म के पास, बिजनेस के पास, व्यापारी के पास, व्यापार के पास उनको देने के लिए पैसे नहीं है एज पर द डेट प्रोमिस्ड, जिस डेट को प्रॉमिस किया गया था कि इस डेट को आपको पैसे देंगे, उस डेट को फर्म के पास, बिजनेस के पास, व्यापार के पास पैसे होने चाहिए उनको देने के लिए। और अगर नहीं है उनको पैसे देने के लिए, और हो भी नहीं सकते अभी थोड़ी देर तक, हम कहेंगे कि ये बिजनेस जो है सॉल्वेंट नहीं है, ये क्या है, ये इंसॉल्वेंट है। तो ये एनालिसिस से ही पता लगेगा हमें कि एक बिजनेस, एक व्यापारी या एक व्यापार, एक व्यवसाय ये सॉल्वेंट है या इंसॉल्वेंट है, इसका दिवाला निकलने वाला है या ठीक ठाक है। सो दिस इज दिस सॉल्वेंसी ऑफ द फर्म। एनालिसिस ओनली विल टेल यू, कौन? एनालिसिस ही बताएगा कि बिजनेस सॉल्वेंट है या इंसॉल्वेंट है। तो नेक्स्ट पॉइंट इज रिलेटेड विद दिस सॉल्वेंसी, मेजर्स डेट सर्विस